Kia ora koutou katoa. Welcome, everyone, to the recorded version of a series of webinars we ran in December 2024, talking about the key insights we detailed in our Climate-Related Disclosures Insights report. To get things started, this recording will cover the following. First, I'll briefly touch on the work we've undertaken and our overall findings. I'll then discuss our insights in relation to the wider requirements and principles of the regime. Next, I'll explain our insights for certain disclosure requirements in NZCS 1, scenario analysis, and coherence and consistency with other information. I'll then briefly touch on what is ahead for our monitoring activities in 2025. So, to set the scene, our report is based on reviews of 70 climate statements prepared for the first and second cohorts of climate reporting entities. In other words, those with reporting periods ended between December 2023 and March 2024. We were not able to complete reviews of all climate statements lodged for these reporting periods, but the population covered represents a broad mix of statements prepared by different types of reporting entity. The purpose of this work was to understand where entities are at and provide useful and timely feedback in accordance with our educative and constructive regulatory approach. In terms of climate statements not covered in this report, particularly those with later reporting periods, i.e. June balance dates onwards, there is a trade-off between providing timely feedback to the earlier cohorts and waiting to capture reviews across the entire first year of disclosures. We thought it was useful to provide our initial insights now rather than waiting until the first half of 2025. So, on to the findings. Being one of the first countries in the world to implement mandatory climate reporting does come with challenges for preparers and users of the information and us as the regulator. In terms of preparers, reporting entities have only had a short time to understand the requirements and to prepare their first mandatory climate statements. Entities were also starting from differing levels of maturity for climate reporting. For some, this was the first time they prepared climate statements, while others had had the benefit of previously preparing voluntary statements. We acknowledge that there have also been challenges obtaining reliable data, incurring higher than anticipated costs, and in deciding how to make disclosures in the absence of guidance on some topics. The amendments that the XRB has made to NZCS 2 in November 2024 will allow climate reporting entities some additional time to grapple with some of the more challenging disclosures. Overall, we're pleased with the efforts that entities have made to prepare and lodge their first set of mandatory climate statements. We acknowledge the significant time and resources involved to understand these requirements and to develop the underlying processes. As I'm sure everyone can appreciate, this is a big undertaking for preparers, and we commend reporting entities for all the work done. However, we did identify areas for improvement across almost all of the climate statements that we reviewed. However, this did align with our expectations, given this was the first year of the regime and the novel and challenging nature of this exercise. The significant work that entities have put in this year places New Zealand well ahead of the pack for climate reporting internationally, and we feel that we're in a good position as we head into year 2. In terms of providing feedback to improve disclosure, we considered it appropriate in most cases to provide this by way of our report. However, in some cases, we reached out to entities individually where we wanted to understand their approach, or the feedback needed to be communicated ahead of our report, in cases where the findings were material, or where they were not common across reviews or related to a legislative requirement having not been met. Our report and this webinar today focus on the more common areas we identified for improvement. We encourage entities to assess which areas for improvement are most relevant to them, with the aim of enhancing the quality of their climate statements in the next reporting period. We will start with our findings in relation to the wider requirements and principles of the regime set out in NZCS 3. Our monitoring highlighted some areas where disclosure could have been improved, so we'll begin with materiality. The standards require that information should be disclosed if it is material, but there is a balance between providing sufficient disclosure and too much content. Too much, and the statements may be hard to follow, or obscure material details. Too little, or omitting material information, and readers may get an incomplete picture. So focus on what is material and leave out anything that isn't. We encourage CREs to think carefully about this balance, which should become easier over time as entities become more familiar with the regime. We saw differing approaches being taken here. Some statements included substantial detail that may not have been relevant, possibly obscuring material information. Examples of this included excessive detail about processes or lists of generic information, repetition, or placing emphasis on information that didn't seem relevant. Other statements didn't appear to disclose anything against some of the requirements. We know that there may be valid reasons why entities couldn't comply with every requirement in year one. However, if entities are unable to comply, they should consider what they may need to disclose to achieve fair presentation. Entities should document any omissions or inability to comply in their records and include the reason, an explanation of what has been done, and any progress towards compliance. Requesting records wasn't part of our monitoring this year, but it may be so in future. Entities should undertake and document robust materiality assessments to determine what is and is not material for their primary users. Processes associated with this regime can generate a lot of information, and CREs need to work out how best to use it. This is illustrated on the right. Filter down to the information that matters for primary users. This may mean risks, assumptions, impacts, governance policies, etc. What is material for your primary users? The standards require that an entity must fairly present its climate-related disclosures. To achieve this, CREs must both apply the information and presentation principles shown on the right. In our monitoring, we saw some instances where fair presentation may have been undermined, and this is highlighted in the report. Our reviews indicated that some statements which didn't meet the specific disclosure requirements also didn't align with some of the fair presentation principles. These 2 points appear linked. The message is that if you think closely about the presentation principles, you'll be more likely to meet the other disclosure requirements. We note the challenges in deciding how to present information and how much is required. As with materiality, CREs should consider how to present the information in the most useful way for their primary users. So fair presentation and materiality should be considered hand in hand. We identified some examples of disclosures that may not align with fair presentation and certain information and presentation principles. These are worth discussing as they impact how primary users perceive the information presented. On this slide, I'll discuss some of the recurring themes that didn't fully align with fair presentation. The first of these is the overemphasis of positive news or impacts, and this can undermine a number of principles as set out on the slide. Examples of this included use of bold fonts or prominent placement or repetition to emphasize achievements, while less favorable elements are given less focus. Alternatively, using infographics from a parent company's report, which highlights global targets that don't actually apply to the New Zealand reporting entity. It's important for primary users that information is balanced and relevant. Next, we found some disclosures difficult to understand or incomplete. Missing legends or axis labels or undefined terms can create confusion. To ensure fair presentation, it's important that details like this are not overlooked. Moving on, we noted some disclosures lack contextual information which relates to the principles described on this slide. Examples of this include descriptions of processes that didn't specify whether they were currently in use or planned for the future, or targets that lacked context, leaving users unable to judge their feasibility or the level of ambition. Ensuring that this context is properly highlighted helps users make more informed decisions. The omission of information is another concern. For instance, anomalies or large variances or even zero scope 1 or 2 emissions were not always explained. These may relate to outsourcing or changes in a CRE's ownership, for example, but without clarification, primary users can be left guessing. Explaining this can support comparability. Finally, we also noted instances where references to third parties were vague. For example, describing alignment with target-setting organizations, where it's unclear whether the target is validated or whether the CRE is a participating member, or the use of assurance-related terminology, such as independence or verification, being used for advisory services. It's important that disclosures are clear about the nature of third-party relationships. So, how much should an entity disclose? Again, we saw varying approaches here. We've discussed the tension between providing enough information and potentially obscuring relevant content, and the link between materiality and fair presentation. Ultimately, it's for each CRE to decide how much information to disclose to satisfy the requirements. The Fair Presentation section in CS3 is useful here and notes that disclosure objectives can be used to determine whether to disclose additional information. This is also clear that any further information should not obscure relevant information. In other words, consider materiality and the presentation principles such as understandability. As a reminder, the disclosure objectives are at the start of each of the CS1 sections, being governance, strategy, risk management, and metrics and targets. In short, these objectives outline the requirements for primary user understanding in each of those sections. A CRE can consider engaging with its primary users to help strike this balance. This could help determine the level and complexity of information that's disclosed and may also be useful for materiality assessments. On to methods, assumptions, and data uncertainty. This is an area where we'd like to have seen more disclosure. As laid out in the basis for conclusions of CS3, uncertainty, data quality, and completeness challenges are an inherent part of climate reporting. We understand that, especially in this first year. We do, however, expect transparency in identifying any material challenges and communicating their impact. New Zealand climate standards require that entities describe their methods and assumptions where they're not apparent and identify material limitations and data or estimation uncertainty. This matters because primary users should be able to understand how disclosures were derived, the context, what limitations exist, and how those limitations may affect those disclosures. This might apply to metrics, scenarios, or the assessment of a climate-related risk or opportunity. In some cases, we found only limited information. For example, methodologies, for instance, regarding targets or emissions calculations. Alternatively, sometimes there was little or no disclosure of any limitations. In assumptions, which may be required in areas such as scenarios or assessment of climate risks, these may be areas involving significant complex judgments, and estimates such as the effects and costs of flood inundation should be disclosed if material. In regard to data uncertainty, there was sometimes little detail on data quality or on the completeness of datasets. This includes both the data itself and any impact on disclosures. We did see some detailed examples disclosing challenges associated with old or incomplete datasets and cautionary statements around data quality. But other statements disclose little, and we encourage entities to think carefully about this. In addition, disclosing material sources provides context and an opportunity for primary users to investigate further. We know that there may be constraints when using proprietary third-party sources, but we do encourage transparency. Remember that there is a balance between what is material and clear disclosure. To continue this theme, our report looks at two areas where CS3 has specific requirements that were sometimes overlooked: scenario analysis and GHG emissions. Taking these in turn, I'll outline examples of things entities might consider. Again, focus on what is material. On scenario analysis, where material, disclose the sources and archetypes used, sector-level work if applicable, and the assumptions, uncertainties, and any limitations involved in creating scenarios or the analysis process. In terms of GHG emissions, we know that data quality and gaps and even availability are challenges. Consider the impacts on disclosures and what your primary users need to understand. For example, in relation to uncertainty, sampling problems, whether a range had been considered for a disclosure, or the methodologies, such as the activity basis for an emission source. That concludes the section on general principles. Now, we'll look at some findings linked to more specific disclosure requirements. We identified a number of areas for improvement, including alignment with some specific disclosure requirements, scenario analysis, and ensuring consistency. Let's delve into these findings and explore how addressing these aspects can enhance climate-related disclosures. Here, we'll discuss the description of climate-related processes, adding more details to processes and their frequency. One gap that we observed is that some CREs stated that the process under the thematic areas of governance or risk management did occur, but didn't explain how that was carried out. For example, some disclosures noted that a government's body monitored progress against targets without describing the steps involved, such as conducting monthly board meetings or holding dedicated sessions. Detailing these mechanics allows stakeholders to understand not just that actions were taken, but how they were implemented. Another area we observed is that CREs should clarify the frequency of such actions. Terms like regularly or periodically don't provide enough clarity. Regularly for an entity may not have the same meaning for their primary users. Including non-specific descriptions may leave primary users to make assumptions about the frequency of processes and view the entity more or less favorably based on their assumptions. To ensure clarity, CREs should disclose the frequency of their processes. Some disclosure requirements under the thematic areas of governance, strategy, and risk management ask CREs to explain how climate-related processes or matters connect to other organizational activities. This means clearly explaining whether and how these processes are integrated into broader business functions. We found some disclosures mentioning a link between climate risks and strategic planning or capital deployment, but lacked specific detail. For instance, some simply state that decision-making was done in favor of sustainability, a phrase that doesn't clearly convey the depth of this commitment. Such disclosure may also undermine fair presentation, particularly the principle of balance. Therefore, CRE should ensure all material information is fairly presented, so primary users can understand how climate-related processes integrate with the other organizational activities. Clear and specific disclosures can support transparency and offer valuable insights into these connections. The climate standards require CREs to understand and apply the meaning of current impact accurately. We observed some instances where disclosures of current impacts deviated from this meaning. For example, some disclosures focused on anticipated short-term climate risks rather than actual impacts experienced during the reporting period. Remember that a current impact refers to a climate-related event that has happened in the reporting period. They are not future or anticipated effects. In other cases, CREs describe climate-related events, such as Cyclone Gabrielle, without clarifying how these events actually impacted their organization. Understanding and clearly distinguishing these terms helps enhance transparency and ensures that disclosures meet the intended standards. Here, we would like to see CREs being more specific when describing climate-related risks and opportunities, so primary users have all material information available in relation to risks and opportunities. We noted that some climate statements lacked this clarity. For example, some risks and opportunities were described generically at the industry level without showing their relevance to the entity. As I mentioned earlier, this approach can obscure material information, potentially impacting its clarity or usefulness to primary users. Some other disclosures we saw were too broad, such as mentioning flooding risk without details like the severity or frequency. Additionally, some disclosures fail to tie risks and opportunities to specific time horizons, leaving users uncertain about when these issues might arise. So it's important that CREs ensure their disclosures are entity-specific, provide adequate context, and clearly align risks and opportunities with short, medium, and long-term time horizons. Moving on to GHG emissions targets. Here, it's important to include specific information on each target. However, we have seen gaps in some disclosures, including net zero targets. We'd like to see if Scope 3 emissions are included in the target or not, and the extent to which targets rely on offsets, or whether those offsets were verified or certified under a specific scheme. The climate standards also require that entities explain how their GHG emission targets contribute to limiting global warming to 1.5 degrees Celsius. CREs should be clear about the extent to which their view relies on a third-party opinion or method. Statements like grounded in science or science-based or aligned with third-party methodologies often lack the context needed for primary users to understand the basis of these claims. It's important that primary users are given a balanced and complete description of a target, including any material contextual information. Moving on to scenario analysis, we have 4 findings that we'd like to highlight to help enhance scenario analysis in future reporting periods. But first, we'd like to acknowledge entities for the effort that has gone into this novel area of work. That, along with all the work done for the sector level scenarios, has placed New Zealand in a good position in this area. The first point is that some CREs disclosed what they did to construct or to develop scenarios, but we found that some statements did not disclose sufficient detail around the process undertaken to analyze their climate-related scenarios. That is, the process to place their entity within the scenarios to help them identify climate-related risks and opportunities, and to assess their strategic resilience. So how will the future develop? That's the purpose of the narratives, to draw a picture of how the entity envisions the future developing by detailing a series of events unfolding over time in a cause and effect relationship. Some CREs only disclosed brief descriptions of each scenario narrative, and some were only 1 or 2 sentences. Other disclosures described a series of assumptions about a future state or an endpoint, rather than describing how the future may develop to get to those endpoints. While the climate standards require a brief narrative, in NZCS 3, paragraph 51, it clearly outlines the minimum inclusions in scenario analysis methods and assumptions, including a brief description of the various emission reductions pathways in each scenario and the assumptions underlying pathway development over time, including the scope of operations covered, policy and socio-economic assumptions, macroeconomic trends, energy pathways, carbon sequestration from afforestation and nature-based solutions, and technology assumptions, including negative emissions technology. Narratives should include all material information to explain how the future develops under each scenario. We found some CREs may have conceptualized the 1.5 degrees Celsius scenario as being lower risk, the 3 degree scenario as higher risk, and the third scenario as being somewhere in between. This may result in scenarios which, depending on the pathway and the temperature outcome, understate the level of transition and or physical risk. It can also limit the CRE's ability to assess its strategic resilience against a series of plausible and challenging futures. Each scenario should explore pathways with different levels of transition and physical risks. These scenarios should be distinct from one another and challenging enough to test the resilience of the CRE's business model and strategy to a range of plausible future pathways. And for our last point, we'd like to highlight that most climate statements we reviewed indicated the use of scenario archetypes and or New Zealand sector-level scenario analysis. However, some climate statements did not disclose the extent to which these archetypes or sector-level scenarios were used to develop the entity-level scenario analysis. For example, it was often unclear whether these scenarios and archetypes were fully adopted or modified to be more relevant to the CRE's business model and strategy. There were also disclosures that indicated entities had made changes to the sector level scenarios, but they did not explain what those changes were. Consideration can also be given to the global level of cooperation in the scenario and whether the CRE is in step with this, the degree of emissions reductions in the scenario, and the rate of technological change. Consider whether the archetypes are consistent with the characteristics of the CRE's pathway and relevant to their business model and strategy. CRE should clearly disclose all material information to explain the extent to which sector-level scenario analysis has been used or modified. Primary users may not look at climate statements in isolation and may consider other publications from the CRE. We identify cases of inconsistency in climate-related information in different publications. For example, information around GHG emissions and climate initiatives in the annual report were described differently in the climate statement, leading to a different impression. We also found material climate information in other publications that was not disclosed in the climate statements. For example, financial statements disclosed climate-related contingencies or goodwill impairments caused by climate-related events, but neither of these details appearing in climate statements. These examples underscore a key point, that is, climate-related information must be consistent and coherent across all of a CRE's publications. If material climate-related information appears in other documents, such as annual reports or financial statements, sustainability reports, or on a company website, it should be referenced in the climate statement. Additionally, it should be disclosed in the same manner and light, ensuring consistency in how it's presented across different documents. That concludes our monitoring findings. I'll now say a few words about what's next for us in 2025. Looking ahead, we'll continue to review as many climate statements as possible prepared by reporting entities for periods ending 31st of March to the 30th of September 2024. We anticipate these reviews will continue until the end of April 2025. Where appropriate, we'll provide these entities with individual feedback or direct them to the relevant insights in our report. For the second year of reporting, we'll continue to take a constructive and educative regulatory approach to monitoring and enforcing the CRD regime. However, we will be looking for improvements based on the insights in our monitoring report or any individual feedback provided. In addition to the scope of reviews for the first year of reporting, we'll incorporate additional focus areas into our reviews. These include assessing whether entities have complied with the requirement to obtain assurance over their GHG emissions disclosures, whether entities have made reasonable efforts to comply with the requirement to disclose current financial impacts and the transition plan aspects of their strategy, and that disclosures are consistent and coherent with those made in the first year, and if not, that any material differences are disclosed and explained. This may include checking to see whether any commitments to take action or to deploy new processes or gather information, etc., disclosed in the first year of reporting have been followed through, and if not, that this is disclosed and explained. This monitoring will commence in May 2025. Feedback to support higher quality disclosures will be provided individually to entities where appropriate and through future monitoring reports. That concludes our presentation. Thank you for listening to this recording, And please do reach out to us at the email address on the screen if you have any questions or would you like to discuss any matters in relation to the climate-related disclosures regime.